Okay, I think we're live. Let me know if everything seems to work. We're on 0 dropped frames at the moment. If you're here on Friday, we had a bit of a shit show with the tech side of things. Hopefully that's fixed. I did a test stream yesterday, and it was okay, I think. So, shouldn't have any big issues. Always starts well. Yeah, I agree, Flary. That's what happens. Hope everyone had a nice weekend. Excited for the week ahead. All that fun stuff. Okay, 7 o'clock. I think we can get going. First things first, of course, thank you to the show's sponsor, which is Bybit. You can find the relevant links to them, their platform, and current promotional materials in the description below. If you'd like to support us, support the stream, be sure to check them out. So thank you to them. Make sure to subscribe to the channel if you haven't already. Like the video, all that good YouTube algo stuff, which gets repetitive, but is cool nonetheless. And it's a good way for us to assess feedback and all that stuff on the types of videos we make. Someone says, how is your friend Elon? Yeah, that was a really weird, anomalous thing that, you know, Elon Musk liked one of my old tweets, which is hilarious, to be honest. But, you know, we're in a really weird section of the simulation. So I think anything's possible at this stage. So for those living under a rock, probably the primary driving reason for this move is that Tesla announced, I think 1.5 billion of its treasury reserves were deployed to buy Bitcoin. And I think that was roughly calculated to be around either 7 or 8% or thereabouts. I think estimates vary, but mid to high single digits into Bitcoin, which is very cool, obviously. We discussed it a bit on the other show that I did today with Legistatus, Luke, Carpe Noctem, etc. You know, we're discussing the implications of that. Like we saw, for example, the impact that MicroStrategy had. Now it's not just MicroStrategy, which I don't know about you. I didn't know a fucking thing about MicroStrategy. Wasn't a company on my radar. I don't think it was particularly high profile. So that's one thing, you know, the brave first mover, the one which goes and becomes a de facto Bitcoin hedge fund, which is sort of hilarious in its own right. So there's that. But I think when you get someone like Elon and something like Tesla, more importantly, making this type of move, it's obviously pretty significant, right? It's not just any company. It's not a company being bold or just kind of YOLOing their treasury reserves. This is a company in the S&P 500, one of the most high, you know, very high profile, all that kind of fun stuff, which is going to generate discussion, generate attention, etc., etc. And again, it's not like Elon just bought some meme Dogecoin for himself. This is like a non-trivial amount of his company's reserves, right? So it's obviously quite big news. We'll see what the implications are sort of in the days and weeks to come, but certainly isn't bearish, right? And obviously he's the richest man in the world, etc., etc. There's like a lot of important stuff with regard to the context. You know, who's going to be next? We know that in these tech circles, yeah, number 4 company in the S&P, there you go. In tech circles, you know, trends are really strong, and especially both in terms of how Tesla's done and also just Elon himself as an entrepreneur. We might see some copycat behavior. Like, we can sit here and speculate all day, but the short of it is it's good news, right? It's positive for Bitcoin, and the market reacted accordingly, at least on the first impulse, and we've sort of been consolidating since then. Something I like to do towards the beginning of a new week is to wipe my charts, just to make sure I'm not stuck in any biases or anything like that. So we actually discussed on stream, we'll run through the time frame, but on yesterday's live stream, we discussed the weekly close, and my basic interpretation was that the weekly close is bullish because we were within a consolidation here, right? And then yesterday we closed above it, albeit marginally, but still more or less above it. And then the most aggressive case for continuation we discussed was a minor pullback to the original level itself before sending off higher. And that's kind of what we have had today, which is cool. So even if we add this as our weekly level here, I think that's more or less where the market found support, yeah, on this move here. And then ejected higher. So that's always cool. you love to see it, right? And that's something I think that's worth keeping on the chart. Generally, with the weekly theme, I think you can reasonably draw a range like so, where the highest close is weekly resistance, seemingly turns support, and the lowest close is the bottom of the weekly range. And those are the kind of the boundaries that price has been trading within. Now, viewed from a slightly kind of zoomed out, higher time frame, macro perspective, whatever, if we look at it, it essentially looks like, highest close here, lowest close, this is our range consolidation, and then pending the weekly close, which is very important, right? Because we don't want to rush to weekly conclusions before there's weekly evidence of them, and it's only Monday, so this candle can form in a lot of ways. But as long as it doesn't fall back below the range high, it looks like the market was, impulse, consolidate, impulse, longer period of consolidation, and as long as the upper boundary continues to hold, I can only expect continuation in that type of pattern, impulse, consolidate, that sort of thing. So it looks like we're roughly kind of in this portion here, assuming the weekly close wants to play ball and close in a reasonably friendly manner. So that's kind of the weekly context that I'm aware of. In terms of targets, it always becomes hilarious because, there's nothing really. I think at 20k, 40k was a fairly straightforward target. Because just kind of double the all-time high makes sense. And I really think, as I mentioned before, in the absence of really sophisticated tools for finding targets and previous levels, etc., you can look at options, strikes, you can do, a million different other things. But I think, for me personally, I just like to use round numbers at that point and narratives, which I think will be psychologically, quote unquote, compelling in the absence of many other things. You can use pivots, again, options, strikes, I don't know, fib extensions, the toolkit. There is certainly a toolkit for that sort of thing. I personally am not hugely compelled by anything really. I think we're all just kind of guessing the best we can when price enters price discovery. So, 50, 60, whatever, we can just sort of stepping up if this is a weekly breakout. And I think we'll have to kind of play it by ear at that point. Of course, the quote unquote bearish case would be if this range high breakout were to fail for some reason. So for price to dip back below and fail to find support at that level and find resistance, close below it, whatever. Generally, this would look really rough because then you'd have the Elrond candle being the failed breakout, and then anyone who was buying that breakout or participating during the course of that week would then be underwater, and that's a whole lot of positions looking vulnerable at that point. And in that case, we'd have to entertain the idea of retesting the range low and blah, blah, blah. But for the time being, what's in front of us, it looks like a breakout. Weekly and, daily close as well will confirm. So until that kind of weakness emerges at 38, I'm just going to assume number go up, right? Because that seems to be reasonable for the time being. And of course, with that candle came a new all-time high. So if we delineate it here, at around 42k. And you can see on Coinbase at the very least, we already had the break and very short-term retest of the all-time high come in on the first real sell-off. Now, generally, as you'll recall, I'm not a huge fan of the market pulling back to all-time high levels, but this is just about acceptable when it comes to scenarios of aggressive continuation. If you recall Link, for example, or ETH to a lesser extent, but certainly Link. If you're looking for a kind of all-time high break and then a move higher, the less time that's spent at the all-time high, the more bullish that is, or the better that is. I know from a technical point of view, it may seem very attractive from a support resistance, argument to say, well, I watch these shitty free YouTube videos from Crypto Cred, and he said this is resistance, so if it pulls back, it's fine, it's support, and that's kind of where I should buy, right? I'm sympathetic to that view generally, but in the context of the all-time high, if it's really the type of strength that most participants expect it to be, the reasons for pulling back there should be kept to a minimum, and if the pullback itself happens, the pullback itself should also be kept to a minimum, not sort of consolidating there, not spending much time there at all. You really want to see buyers really step on it if the all-time high is as bullish as it's sort of expected to be. So those kind of the main bits of context. So pending weekly breakout, right, or weekly breakout pending confirmation. The way we can assess that is by looking at the daily time frame. The most bullish case for continuation is kind of no pullback to all-time high, certainly no pullback to weekly structure, just basically impulse, consolidate, impulse, etc. And we've already technically, at least on the spot pairs, had our all-time high breakout and retest here. And what the cash pair does is obviously very important. As for the lower timeframes, it's pretty interesting that there are comments coming in about, and understandably, the market positioned very bullishly on this move. So as a result, very bullishly and very aggressively as well. So as a result, we see that funding, for example, is high, which is what happens when the derivative, in this case the perpetual swap, like on Bybit, for example, is trading at a significant premium to the index, right? In order for the perp to follow the index in price or to converge, whatever you want to call it, you need to kind of set up almost incentives or mechanisms for that to be the case, right? So, if everyone's bullish, well, how do you get some sellers in the market to make sure that the swap doesn't run away or the future doesn't run too far away from the index? Well, the way you do that is via the funding mechanism, or the way the perpetual futures do that is via the funding mechanism, which makes long holders pay a certain amount to stay long. So the more they need to incentivize kind of sellers to bring price back in line with the index, the higher funding is going to be. So generally when funding is high, it means that derivatives traders are very bullish and being aggressively so. And when funding's low or negative, it kind of has the opposite effect. Practically what it means is that financing positions, if you will, is pretty expensive, right? That's sort of, you can, for example, extrapolate the funding rate to a certain type of APY to get an understanding of how cheap or expensive those positions are. So you'll also see it kind of discussed in that kind of manner that, funding is cheap, or, financing is cheap, or financing is expensive, etc., etc. So with that in mind, how do we navigate around this intraday structure? I generally don't mind this consolidation for the time being. It's sort of, high funding, etc., sort of understandable, but again, we've already had the all-time high retest. If this thing's going to conveniently keep going higher, it should really be the case that from a zoomed out point of view, you have an impulse, you have some sort of range, maybe funding resets or whatever, those positions which you've already paid a ton of funding close, and then, the premium on the derivatives exchange drops, falls closer in line with spot, and then you have continuation higher. What that would look like on lower time frames, at least if we use the hourly, I think a reasonable way of depicting that would be the following. We can take, for example, this cluster here on the hourly, right? And basically say this is our support resistance structure. You had an impulse, move sideways, impulse, currently acting as resistance. So maybe, and again, it's slightly tentative up here because, it's not the cleanest level in the world, given there's really not much going on. And look at the candle we're dealing with after all, right? It's not so straightforward. But a tentative technical argument could be that, if you manage to break above this area and then either pull back to support or just basically reclaim it because it's currently acting as resistance, maybe then we have some sort of low in, with this being the overthrow deviation, and then get our continuation higher into the highs. That's I think a reasonable argument, but I think getting long like right now is just a bit tricky, not only from like a financing point of view, etc., but from just a technical standpoint. That the consolidation kind of looks a bit droopy, and I'd rather position either lower, somewhat reluctantly, but lower at support, which I don't want to do if the market's really bullish, right? Or higher above resistance, expecting, this to be the low, and then a fast move towards the highs. Like right here, kind of gun to my head, is this a retest of support or resistance? It kind of looks more on the resistance retest side of things, which is why I'm not rushing into conclusions when it comes to, immediately buy the dip because Elon Musk, right? Now that hasn't been exactly reflected in my own trading. It's been a bit sloppy. I caught like a portion of the consolidation earlier and then got into a bit of a shitty position, basically on the top side of this cluster here. So it's been fun. It was fun catching a portion of this, much less fun buying the top of this cluster here. In case you're interested, I've literally puked this retest while I'm live streaming and got out of that trade on the other monitor. So if you want to pump it now and do that, I'll happily get on board and buy it back from you. So yeah, I think that's really Bitcoin. So the themes to look out for from a high time frame point of view, it's weekly breakout, having to hold ideally, and from that point we just have trend continuation. On the daily side of things, the less time spent at the all-time high, the better. I just think that's generally a wise and reasonable expectation to set for the market, that if it is really that bullish, I mean, look at the last time we broke all-time high. I know I talk about it all the time, but like, this is the candle and then no looking back. So in a similar vein, if this is going to be the type of continuation that we're looking for in a somewhat similar fashion to what we had at 20k, then it really shouldn't be spending a whole lot of time back or around that level. That's weekly, that's daily. As for lower time frame stuff, on the intraday, I think certainly any sort of higher high or a reclaim arguably of this level would be pretty good. I think that would probably make me buy back, although don't quote me on that, because at that point you'll have like almost a failed bearish retest at support before reclaiming. You've got a risk-defined setup there, and then high probability targets in the form of the highs. Like, I'd be kind of comfortable with that, but this is a bit of an in-between retest for me, which I just puked anyway, so I've got no business telling you that I'm bullish into it. So what that would look like, for example, on... Yeah, I think the hourly is really your best bet. That. I'd be willing to repunt on this, probably, but for now, I just have a rule, which I'm sure you've all heard me say before, that when my long entry starts to look like a short, I get the fuck out. Right? That's just something that has... Whenever I've ignored it, I've gotten completely wrecked on trades. Whenever I follow it, I mean, look, it's just generally a kind of plus EV type of decision. So that's kind of my reasoning here. My idea was that we had the impulse up, we consolidated, we had an impulse up, right? Really bullish news, etc. So I was expecting, you know, you get a bit of your classic overextension, tall wick, liquidations, high funding, etc., etc. But ultimately, for the first support level formed, to hold and do something like that. Instead, we had one close, the last hourly, or the hourly from 2 hours ago, kind of closed into structure. I was fine with that. That closed, the most recent hourly closed below it, which sucks. I mean, it's a pretty clear break of my level. And then again, during the stream, when it came back to retest my entry, I've cut that trade because it looks like pretty much the opposite of what I want to do. So from a counter trading point of view, fucking buy it and make it moon, make me regret my decision. But from a decision making point of view, which is what I care about a lot, if my buy starts to look like a sell, I'll wait until it doesn't. And I may have been a bit of an idiot and gone really almost kind of max size on buying kind of towards the top of this cluster. So I see this exit as a as a privilege sort of thing. And, you know, some of the guys that I trade with and share ideas with, I know watch the stream. So they wouldn't let me off the hook anyway, saying, oh, why would you buy this? It looks like a bearish retest. I'm fine being upfront, transparent, whatever. If I take a great trade, I'll let you know. I caught like a decent portion of this breakout trade, literally market buying the news. And then I took a dog shit trade on this retest here, which isn't doing what I'd reasonably expect it to do for now. But that's Bitcoin. Let me know if you have any questions. Should make sense. Long story short, if this is a kind of high time frame breakout on this really positive news, which it should be if the news has the kind of impact I think it will, then the less time we spend around all-time high, the better, and any funding, normalizing dips, etc. Should be very quick and not be spending much time around the all-time high, in my opinion. Okay, and any sort of reclaim event or higher high should probably be a good green light to punt, at least for me. Okay, is that like reasonably understandable? Cool. On the ETH side of things, so ETH obviously made a new all-time high as well. This is something we talked about on the live stream last night, that the daily close at support kind of here. That played out quite nicely. I mean, it technically reached its target, and ETH did make a new all-time high. But it's unsurprising that there was a bit of a kind of vacuum effect created, at least in the short term, where Bitcoin's mega moon, you know, just a lot of the rotation went towards Bitcoin, and ETH underperformed on that move. And again, that's not totally surprising, although it seems like Tesla's mandate does include other digital assets in its purview. Its purchase was Bitcoin, and generally whenever we've seen these big corporate news come out with regard to treasury allocation, so far it's just been Bitcoin dominant, so it's not entirely surprising. that the beneficiary of those big moves is Bitcoin more so than Ethereum. Depending on the daily close, it still kind of looks range bound, right? If we take this lowest close as support, I mean, I was going to use this level, which I think you can. It's reasonably straightforward, but maybe we'll stick to the simple ones. This highest close as resistance. Ever since the all-time high break, ETH has been moving sideways, right? So this is the all-time high break candle after like it looks like a multi-week ass ending. I always call them ass ending triangles because I don't like the pattern, right? You call an ass ending triangle. So you had this like high time frame multi-week pattern, and generally like the longer these patterns go on for, the bigger the trending move that's to follow. And again, going back to Bitcoin's all-time high analogy, like when it broke all-time high, it didn't look back for, I mean, it certainly had more than just one bullish day, right? Whereas in this case, you have all-time high break on this daily candle here. You have one day of upside and continuation, which is great. And then since then, it's just moved sideways. Okay, so certainly some more work to be done to warrant, I think, arguments for ETH's outperformance. I don't quite see them for the moment. I mean, it still looks fine, right? I mean, technically speaking, etc. I think there's a pullback into a decent structure. But I just think a lot of the money narratives are going to be around Bitcoin for the time being. At least for during the course of this week while we resolve the high time frame breakout. And I think ETH BTC, while still being at support, is leaving a lot to be desired on slightly higher time frames. And for me specifically, it's this monthly level, which I was aware of, but kind of tried to ignore because I was hoping it would at least wick higher, which is basically this swing low here on the monthly. My idea was even if we trade towards kind of 55s, which is the reasonable target I think people have for the high time frame breakout, that it would maybe wick above it first and then settle closer to the level. But it looks like we're getting a bit stuck on the ETH side of things. I suppose this is the simplest way I could describe it, is that I think the whole Tesla news, reserve allocation, whatever narrative is understandably going to be Bitcoin dominant. And as a result, I would certainly be paying more attention to Bitcoin full stop, right? Big news moved the market, moved Bitcoin more than it moved ETH. And so any kind of follow through, be it continuation or reversal, I'm going to be taking my hints from Bitcoin rather than ETH. Like, does that make sense? From a, I don't know, just in terms of structuring this kind of thing. Maybe not. Have I been talking to myself the whole time? Okay, nice. Now, as for altcoins, and let me know if you have any questions. By the way, I'll do my best to answer them. Ideally, which aren't chart requests, but you know how it is. On the altcoin side of things, they've actually performed like the strong ones have held up pretty well, all things considered. Are you winning, son? I'm up today, but I gave back, I think, half of my earlier trade by basically oversizing Bitcoin on this retest here, which I've cut during the course of this hourly, and I might get back in if it does something like that. Overall, up, slightly disappointing on the second trade of the day. I mean, that's always funny, right? I opened Twitter and saw that Elon Musk buys. I market buy Bitcoin and catch a big portion of the move, like kind of the brainless trade where you, without an edge or without even being there at the moment the news came out, hit the green button, make money. And then the kind of follow-up trade of, oh, let me actually buy support, that's the one that that ends up taking me out. But whatever, c'est la vie. So altcoins, like the strong ones, have held up pretty well, which is cool. I don't really want to go through LTC and all this other stuff. You can see really a lot of the majors, all the old guard, have suffered. I mean, against Bitcoin, certainly. Same with the DeFi stuff. I mean, it's this whole discussion, right? It's like, what's the impact of Bitcoin on altcoins? And for a while, it seemed like the impact really wasn't that great because a lot of the flows into DeFi, given what a huge role stablecoins now play, you can basically directly plug into DeFi without having to convert Bitcoin or even ETH in the first place, right? And even if you do have those, you can wrap them, etc., etc. But the basic idea was, and the argument that was floating around, which I think still has merit, is that under normal circumstances, if Bitcoin goes up, you'd expect altcoins to go down, right? And then if Bitcoin goes down, you'd expect altcoins to also go down, unless you have some real kind of capitulation-y type of scenario, right? But for the most part, that hangs true. And then again, this is the broad brush version. If Bitcoin's moving sideways, that's when altcoins can really pop, and that's what we saw for a lot of weekend trends as well. Like Bitcoin would just move, we'd have the spot bid, like the institutional TWAP, like all our good kind of Coinbase buying memes on Bitcoin would be active during the week, right? And then on the weekend, when those same programs, if you will, weren't active, that's when we'd all go play with altcoins, because there was clearly still capital sloshing around the crypto space. It wasn't going towards Bitcoin, so everyone's just waiting for the money printer to be turned on. So we just played with altcoins instead, right? Now, I think it's slightly clear, and still, you can still make a good case that the flows into DeFi or into new altcoins aren't entirely secular, or aren't entirely separated from Bitcoin liquidity, so to speak. So I think Bitcoin's, like big moves in Bitcoin still meaningfully impact altcoins. And at the very least, if you pay any weight to altcoins against Bitcoin, which I think you should in a market like this, you can see that on days like, strong, big candle, news-driven, etc., it certainly becomes difficult to outperform Bitcoin on a day like this. But in USD terms, I mean, we're not seeing red across the board, right? For the most part, actually up in USD and slightly down against Bitcoin. But overall, like if you're holding altcoins, it's not like in the normal way when it's kind of set a new all-time high and you've been slaughtered. They've held up reasonably well, so that's important. Andrea says, is Bitcoin going up because of inflation also? I honestly don't think so, right? I honestly don't think so. I think Bitcoin went up because of the news that Tesla had allocated a non-trivial sum of its treasury towards Bitcoin. So that news in itself was positive, but also positive as a result of the speculation of who's going to be next, what kind of trend is this going to set for Wall Street or other S&P 500 companies, or just trends generally. MicroStrategy really took a gamble, and it was an important point, but it wasn't some trend setting. I mean, practically it ended up being a trend setting, but there's no guarantee that MicroStrategy doing what it did was going to have any weight or influence other big companies in the space. But I think with Tesla, the argument is much harder to make, and it's the likelihood of kind of copycat behavior is a lot higher. So I really think the kind of Bitcoin going up, I generally don't like attributing kind of price action, like certain causal events, to moves in price. I think generally it tends to be a bit more complicated than that. But in this case, I think there's pretty clearly a primary driver, and it's not like inflation concerns or anything like that. It's Tesla's treasury reserves, right? At least in my opinion. So on the DeFi side of things, I think we mentioned Link earlier, and a lot of people have basically been disappointed with it, given how little has happened since the all-time high break. You can kind of see the anatomy of that move, which just kind of... It's certainly, when you see what a lot of these other DeFi ones have done in the same time period, like you'd be understandably frustrated if you're a Link Marine in the last couple of weeks. Basic premise, right? You had the all-time high, you had it broken, you even had a very cheeky retest on the next candle, which closed well above the level. Like at that point, if that's not enough to full send, what is? But as you can see, you have all-time high close here, and then you've had 3 weeks of price action, which have more or less been entirely range-bound, right? Not like inside weeks or whatever, but no higher high weekly closes either. Just moving sideways for 3 weeks after an all-time high break. I mean, that sucks, right? That's generally not what you want to see. It's not bearish per se, but it's certainly not the type of behavior you'd expect from something that's just about to keep going as it has done in the past, right? Even if we can even make recent comparisons with like impulsive all-time high breaks or weekly closes above all-time high, like this one here. You had the close above, maybe this is a fractal of some sort of consolidation and then going up. But generally, impulsive break, little time spent consolidating, more going on. If this is going to go, it kind of has to go this week, right? If you want to give it that period of time, where you had 3 weeks of consolidation before the next move up. I mean, we've literally completed that here. 3 weeks of consolidation. It's sort of a now or never type of thing. But there's also opportunity cost to consider for a lot of these DeFi stuff. They broke their all-time high earlier, and they've been going up for these 2-3 weeks. So while it looks fine on its own, looking at Link USD, if you were to look at like Link Uni or Link Sushi or Link, I don't know, SNX even, whatever it is, you've kind of been, or even linked to the index, I assume, you've been underperforming to some extent. So I generally like, I'm not a huge momentum continuation person myself when it comes to these trades, but if I am trading like basically breakouts or breakdowns, I need that shit to go really quickly. Also, I see you've got 200 likes in the video. Thanks. I don't think I even... that's very kind of you, long story short. But anyway, I'm not a huge like momentum continuation type of trader. When I am, it needs to get moving really quickly, because my basic thesis is that any sellers in that market, or, you know, with their stop at the high or whatever else, any kind of room for bearishness has been completely eviscerated, right? So as a result, we should see a very aggressive move away from the level to allow minimal time for anyone on the wrong side of the market to mitigate those losing positions, right? Whereas if the market just starts to hang around all-time high, I think a lot of that spark and imbalance that I generally like to see is gone. So those aren't trades that behave in accordance with what I normally enjoy positioning for, right? That's Link. I think YFI shares many of the same. I mean, it's slightly even worse. Like, this thing has just been moving sideways since, I mean, it's been like a month now, right? More or less a month of moving sideways. And it doesn't look too bad on its own, right? It's just like a bullish trading range. You make a higher high and then start moving sideways. You expect continuation sooner rather than later. Like, I understand. But again, in the context of other DeFi pairs or within its sector, it's been chronically underperforming virtually everything. So again, there's a kind of capital opportunity cost and capital locked up, etc., considerations that have to be considered. Considerations that have to be considered. English is a very difficult language. I still think, because of the amount this is coiling up, and I mean, fundamentally, some good friends of mine have made arguments as to why YFI is like worse than it was previously, beyond just the kind of minting and governance concerns they had. But ultimately, I still think there's room for a bullish continuation trade to basically capitalize on the range. So for me, closing above the highest close here, something like that would probably be a good full send candidate towards the all-time high, and then maybe some sort of big catch-up play to the rest of the DeFi stuff. But it really needs to break out of a range while it's moving sideways and everything else is trending. It's not going to warrant a lot of my attention, you know? And yeah, there's the exploit and some of the way some of the vaults are set up. Again, I don't know the technical details. I'm almost parroting what my friends are telling me. But generally, the enthusiasm is certainly, understandably as well, limited. Both fundamentally and also technically, it's just not been a whole... it's not been terribly interesting. DOT continues to move up. This thing is really cool. I'm annoyed that it didn't offer the type of pullback that I was paying attention to, but the way DOT likes to trade... Yeah, considerations need to be considered for sure. Impulse, consolidate, you know, this basically this pattern that we talked about for Bitcoin, more or less, right? So you had the cluster here, and that's really the one that I was waiting for a retest for. And again, you have one essentially, I think the one we had in the newsletter looked like this, right? That was it, unless I'm wrong, but that seems to be correct. Then you entered another consolidation, right? And I was waiting for at least the top line to get hit. It didn't. We had the breakout, and I just simply missed the next one. If we take the highest close here, retest and higher high mates. Now we've arguably formed another cluster, right? We've got this level here, but I think we can just move up and use this consolidation. So it's reasonably straightforward how DOT is trading. Like, ever since its macro breakout here, it does impulse, consolidate, etc. And if you get a chance to punt on those consolidations on a pullback, those opportunities seem to be worth it, right? So that lands around $20 or more, or around that price level for continuation as the nearest support structure. But anything else is just slightly less clear to me. And I think generally that's a good approach to altcoins, right? You find something that works, like this cluster structure, and you trade it while it works. Like, you know, it works. I mean, it didn't break, at least. I mean, it works. On the top side here, it works. Like, it's just flipping everything, right? It's behaving as it should. I think the moment you get a break of that type of behavior, like let's say it pulls back and actually nukes through it, I really think it's not worth holding the position at that point. Not only because realistically, you've probably taken a bit of a haircut from X to Y on the position itself, but more importantly, it's just a change in behavior. Like, it worked all the way here, and the whole trend was defined by a certain characteristic working. So if at any point that characteristic stops working, then the thesis for trend continuation is at least slightly threatened, right? And in my view, what a lot of people will do who actually, maybe they're slightly biased because they benefit a lot from the preceding trend, when you get some evidence of reversal, they'll buy the first level, the next level, the next level, the next level, hoping that what they're used to, which is this, comes back and rewards them. Whereas in reality, that shift in behavior itself is probably worth kind of cutting, or at least reducing your exposure. And then if it wants to come back and reclaim, etc., I mean, by all means, get on board. You have a risk-defined opportunity, etc., etc. What you don't want to do is be the one who just keeps bidding when you have meaningful evidence from the market that conditions have shifted. That's not applicable here at the moment, right? Everything's holding, so that's good. But just generally for altcoins, especially stuff that's trending a lot, and swings a lot, even between levels, it's really worth kind of clearly defining, I'm bullish until X, right? And then you say, okay, if X happens, how does that affect my positioning? Do I cut in half? Do I cut it completely? Do I close all my leverage positions, etc., etc.? And then, of course, what is X, right? So let's say in this case, what is X? I will say like cluster flip, right? So as long as it keeps up this type of behavior, I'm happy to keep my dot exposure. And then what happens if X stops working? We'll say, for example, full exit, spot plus futures. So when you have this type of plan, you always know what the fuck's going on. Like if it pulls back, you know where it should pull back to for you to add to your position or for you to do nothing, perhaps, right? And then if it does break, instead of panicking and thinking, well, what if this is just a really deep dip? What if X? What if Y? Do I keep buying? Is this a discount? You always see this shit. Like the amount of discounts we saw in 2018 of stuff that went from 20% down off the highs to 99%. There's like a lot of bloody discounts, right? The term itself doesn't mean anything. In this case, you know what the behavior is, and then you know how to act if that behavior changes. And I just think that's a really useful framework to have for these things, which are probably contributing non-trivial swings to your net worth, right? Okay, Aave. Yeah, this thing has gone up a lot. We actually had a bullish... the one DeFi coin we argued that would outperform a lot of the DeFi stuff in the last newsletter, which was here, I think, was Aave, and that went up like, a lot. So pat on the back to us at Technical Roundup. I can shill it because it's free, so go subscribe. The next one comes out tomorrow, etc., etc. Like this is one of those where there are always competing considerations with how much this thing has actually pulled back. So if you look at it from a structural point of view, right, like on the daily time frame, where's support, or like where's the next area if it pulls back to? I mean, there's not a whole lot going on up here. I think most of us would kind of look towards, at the very least, a breakout level, right? More or less here, and say, well, this is support, so if it gets down here, that's probably worth a punt for a bounce, etc., etc. And you'd be forgiven for thinking that. That's like totally reasonable from a structural point of view. The thing to consider is, well, first of all, price doesn't always, or in this case, doesn't often come back to retest these type of levels. In fact, it just hasn't. So that's the first thing, right? If you're going to argue that I want to pull back in order to buy, it's worth kind of at least looking a bit to the left-hand side of the chart and asking, well, okay, if I want to put into action that type of trade, how reasonable is it of me to expect a pullback to that structure? And if it's just never pulled back and has just kept going, then the likelihood of that being a good trade idea or one that's going to trigger is significantly lower, right? Maybe there's like another signal for continuation that's more actionable than waiting for a pullback if it hasn't pulled back to like the last 4, 5, 10 levels, right? That's the first thing to consider. Like, is there good reason for believing that it's going to behave in that type of manner? The second point to consider is pullbacks in relative terms, right? I know it looks fine going from here to the level of support, but if we go from high to low, right? Let's take the high and then to the high here. That's like a 40% pullback, right? I mean, that's a lot. Even if you go from the high to where the market is now, and this is a strong market, right? So we're expecting somewhat shallow pullbacks unless the market more broadly starts to shit. So in this case, you've already had basically a 30% pullback. So when it gets to 30%, you're essentially arguing, well, yeah, I want another 20%, and then maybe I'll punt. I mean, look at this. Look at the strength of this thing, right? It's basically gone parabolic. So if it pulls back like 30%, and you're there asking for another 20, like it gets understandably difficult. So for me personally, this is tough. like I would either need to trade, I think the two solutions I have when it comes to that type of dilemma, one is just to trade lower time frame structures, which means that you still get some good levels, right? Just as an example, you still get some good levels, but without having to wait for like mega nukes to position. So that's point number one. Just look at lower time frames, and in a strong trend, that becomes justifiable. And the second one is basically to wait for something more significant to happen in the market, and you get those 30-40% pullbacks or multi-week pullbacks in the market, and then you either load up on futures, or probably what I prefer to do is to buy spot, buy the altcoins themselves if you think that the sector is going to continue trending and you see a significant high time frame discount on them. I think that's just like an important kind of framework point to make, that there's always going to be, with instruments that are just going absolutely mental, a bit of a difficult trade-off when it comes to how much of a absolute pullback is reasonable versus where is support, or where's the first area on high time frames that I want to punt. And my kind of solutions to those is to, first of all, focus on lower time frames, to get those technical structures without having price to go up, go down a million. And then the second point is, when you do get market-wide, ideally multi-week type of like DeFi summer corrections, pullbacks, whatever, I think that's, if you've been locked out essentially of a really strong trend, when you get those higher time frame shifts, that's kind of when you put up and do business, right? Do I play Valorant? Not for a while. Let's see what Bitcoin's doing. Still, yeah. Same old, not much yet. Gas fees, yes, gas fees are high. Gas fees are high. Sushi. It looks to me like Sushi's held support. Like, a lot of this stuff is up a lot, don't get me wrong. But it seems like it's survived the pullback, at least if we treat it from this kind of lowest close level here. Looks like it bounced from like the first reasonable area for it to bounce. I don't really have any huge issues breakout trading the continuation of this. But for the time being, I think the level I quite like is closer to $12.50 or thereabouts. Not least because we had a breakdown attempt below it, right? So you have the extremity of support, right? Lowest close. You have the close below, close back above, bounce off the level. So I think if it comes back into that, I'd expect it to be supported. Or at the very least, you've got a risk-defined setup in the form of the deviation low. And then you can either treat it as a range with the range high at like 15.5 or whatever, or just take that as your trigger for continuation, right? So for Sushi, if you're a big Sushi fan of the project, at least, I think this is the range we're dealing with right now, between more or less 16 and 13. We've already had a fake out to the downside, which got reclaimed at support, which is generally positive. If it comes back to the level, that may be worth punting. If you're more of a momentum continuation guy, a higher high, surprise, would probably be a decent trigger for this thing, as it has been previously, right? This thing tends to... it's not exactly characteristic for it to fake out having made higher highs. So that's something to look out for. If for some reason the daily level that it's at right now fails, or the intraday setup breaks down, this is kind of the immediate support where it's found support. If that breaks down, I think we then have to look lower towards the... I mean, look, this doesn't look like much. It's the same fucking thing, right? This support is shit. This is the good one. It's already pulled back a shit ton to get to this support. It'll basically have to go 50% down to reach the one that actually looks good, right? So again, what are your options? One is trade it on the low time frame because the trend is strong, or two, wait for the nuke and then buy it at the really discounted supports. That's practically, I mean, I think a good way to approach it. I mean, look, from high to low, again, same old point. It's like a 30% pullback, right? That's a lot. Yeah, again, same story here, right? It's pulled back to the first reasonable level of support and bounced, which aligns with intraday timeframes. So if you're bullish 1 inch as a kind of catch-up play for a lot of these exchanges, I think $4.50, more or less, needs to hold. Basically the bottom of this range for continuation. Here, right? This range needs to hold. And if it fails, again, Point number one, what do I do? It's pulled back, but it kind of hasn't pulled back enough, etc., etc. You trade the low time frames. If they fail, you wait for the high time frame nuke. Point number one, the low time frame thing is around $4.50 or thereabouts. Point number two, if that fails, sad face, the high time frame nuke level is closer to $3. Doesn't look like much, but price going to the high time. The difference is that support is around 12% away. The high time frame nuke support is around 40% away. Do you see the difference? I think, just very quickly on that note, like where you don't want to be is in the middle, right? That's where you get the shittiest trades of all. When the low time frame trend has shifted and the high time frame move is kicking in, but you're still trading it like it's a low time frame trend. So for example, Sushi, right? You've got this support here, which is the nearest one, and then you've got this support here, which is the furthest one. And so the basic thesis is, you can punt this for continuation, but if it fails, get the fuck out, because it's probably, I mean, I'm somewhat cognizant of this, but not a huge fan. I still think, like, at least probabilistically, or even just assume this doesn't exist, right? Just for the sake of, like, the mental model, you don't want to be that person that gets trapped in between, whereby this is the level for intraday punts, and if it fails, this is your corrective level. So the shittest area to trade, by definition, is the one in between, right? Because at that point, if you're here, the lower time frame support has failed, which means it's going to correct, but it's got a while to go until it reaches the high time frame support, which is a lot lower. So this basically ends up being empty space, where you're neither here nor there, or as my father likes to say, ni v pizdu, ni v krasnu armiu. It's literally the worst. It's like a gap, basically, right? Where you're neither the low time frame bounce player, but it hasn't arrived at high time frame support to justify you buying either. It's literally in the middle of nowhere. Don't be that person. It happens a ton for altcoin traders. When they get invalidated in the short term, they just keep buying, even though there's nothing to buy, right? So don't be that guy. When do you get out then? Well, that's a difficult question, right? Because I think we've discussed it on stream before. If you wait to get invalidated, right, you by definition take a massive haircut or some sort of haircut on your position, at least from the highs, right? So for example, let's take Sushi, and your invalidation is this daily close level here. And then, you know, this is the high, and it comes back and actually closes through the lows, right? Closes here. I mean, or even just a little, you know, some way below the level. Just by waiting for your invalidation, which is totally reasonable, you've already taken a 30% haircut from the highs. So, I mean, there's a cost to pay associated with that, right? So you could exit when you get invalidated. I think that's fine. But the kind of cost to pay for exiting with quote-unquote confirmation is that you take a significant haircut as opposed to selling the top, right? Which is a different topic in itself. So getting out when you're invalidated, option one. Option two is to sell at resistances or some sort of predetermined take profit level, and then get back in if the chart looks reasonable. So those are kind of, I think, the two main choices. Number one is kind of your predetermined take profit levels, and if it keeps going, you either get back in or you just let it go. And the second is selling upon invalidation, with which you almost always get a guaranteed haircut. For what it's worth, I generally don't like to wait for my invalidation to sell. I'll sell on the way up, and then if something really forms that's gorgeous and gives me a re-entry opportunity, I'll take it. I'm not a huge fan of, and I just simply can't with my mental state, keep holding these for huge periods of time and then waiting for an invalidation, etc. I'll just sell on the way up and then re-enter if I think it's appropriate. I think he asked if low time frame candle counts as invalidation. It depends, right? If you're looking at daily structure, you want at least a daily close. If you're looking at intraday structure, you give more weight to intraday timeframes. I don't think it's necessarily a formula. I like to view it slightly more holistically. Like, is this level generally acting as support or resistance or in line with my expectations, etc., etc. But if you want to be conservative, take the time frame which the idea is based on. So if the idea is based on daily support, like daily close will probably be the arbiter as to whether it's holding as support or resistance. Also, nearly reached 300 likes. I don't know what's going on, but the support is very much appreciated. Glad you're maybe, potentially, hopefully enjoying something. Yeah, so DeFi stuff continues to look fine. I don't see any issues with how it's shaping up at the moment. You can see even on the index, the dip got bought and across, and this is FTX's DeFi index, from high to low, pretty shallow, but still, all things considered, 23%, and it's almost back at the high again. So DeFi staying bid, Bitcoin going up didn't really create such a big vacuum either, which is cool, and that seems to be where the market is for the time being. Let me see if I've missed. Is there anything interesting that you guys are looking at that you'd like me to take a look at? Anything on your radars that looks too good to pass up? And I don't mean just your bags, right? I mean stuff that you actually think is compelling. I talked about funding, Bruno, at the beginning of the stream. Okay, look, everyone said eGold. I swear to God, if I look at eGold and it's just some mega moon thing, I'm going to be pissed. For fuck's sake, I knew it. I just knew it. That's like the #1 rule of making any type of crypto content. Like, if you ask, what should I chart? You might as well just go on like CoinGecko and look at the biggest movers for the day, and it'll always be the thing that's just gone absolutely fucking mental. What even is this? Can someone tell me what this is? A scam. Okay, nice. Elrond. Okay, here's my analysis. Elrond sounds a lot like Enron, and we all know how that ended. So there you go. That's my analysis. If anyone's actually paying attention to this, by the way, you can stop shilling your tickers now. I can read. If anyone actually cares about this, I mean, it's clearly gone parabolic. As a result, you'd expect support to generally hold, right? Or at least market structure to hold and not make any lower lows. Held here. I mean, doesn't really count. Held here. Didn't do shit here. I mean, we could put out this swing low as well, which came in at these previous highs. So, retest, whatever. So I think if you're trend following this, especially given this wick down, you can more or less delineate this lowest close. Assuming you're in this, I probably wouldn't buy it here. I don't know shit about it, and it looks kind of mental. But you can see that during the course of the rally, these levels of support have held, right? So again, it's that same thing. Is there X, right? What is it? And then what do I do? What do I do with my position if X stops working? So in this case, X is lowest closes or just kind of market structure holding, right? So that's good, right? We know what that is, and in this case, we have that level here. And then what do we do if X breaks? I mean, you probably get the fuck out, right? Because at the very least, you're taking a haircut back into this structure, which is fine. But again, even that on its own is like 20 unnecessary or largely unnecessary %, right? So if anyone actually cares about this, then it's held support and been going straight up for ages. So as long as that behavior is intact, great. The second it shifts, don't be the guy who keeps buying the dip all the way to zero. Someone says RSR. We've looked at Aave, haven't we? I'm pretty sure I talked about Aave. RSR, and I assume you guys are trading the perp. I mean, look, I think one of the primary benefits from a trading perspective, looking at a lot of the DeFi stuff, is that it's been trending. It's been trending a lot, it's been trending cleanly, and it's been pretty straightforward to benefit from, both from a holder point of view, but even if you're trading altcoin futures with leverage, which I generally don't recommend. But nonetheless, it's been nice, right? And then I look at something like this, just structurally, it seems to be underperforming a lot of the other relevant projects in the space. Like, it's just a big old range, right? There's no other way to describe it. It's a big range. And if anything, it's sort of towards the top quarter of the range, if that. If someone told me, gun to my head, you have to trade this, I'd probably just look to punt towards the bottom of the range for my trades, right? Which is what, 30 odd cents, if that. Where is that? Yeah, 0.032s, 31s, whatever, thereabouts. Because my thesis is, this thing's been going sideways forever. You catch some pretty gnarly bounces from the range low, and then it roughly comes into the highs, right? So what's the trade here? Do I want to be a buyer up here? No, probabilistically, I don't like my odds. If it gets down here, then I think that's where the actual opportunity lies. Like, if something's not going to be trending, unlike a lot of DeFi stuff, it already needs to do more to kind of compete for my attention, right? And the way you compete for that attention is by presenting me with an opportunity that's relevant in your current conditions, right? So if the conditions are trending, right, you generally want to be positioning on dips for the higher lows or on the breakouts for the higher highs, right? I mean, that's a bastardization, but you're either on the impulse side or on the retrace side. Pretty straightforward. In a range, for the most part, you're doing business at the extremes. Towards the range low and towards the range high. I mean, midpoint arguably, but not really. So in this case, right, is it trending? No. Okay, so it's a range. What do I do in a range? Buy low, sell high. Is it at the buy low? No. Well, okay, I'm not gonna do shit. Yeah, we can look at some Sol type of whatever things. The Sam Trinity. I mean, FTTs just go up. I don't know how many of you read the... Oh god, I'm forgetting now. Sam did this interview with some magazine. Was it? I forgot which one. But basically, I don't know if you know, but he's got a majority of his net worth in FTT. Like, it's just straight up a fact in the article. The majority of Sam's net worth is in FTT. So it's like a call option on the future of Sam as God Emperor of the universe is watching FTT. So a bet on FTT is a bet on Sam, basically. I think that's hilarious. Also great in terms of skin in the game. So that's that. I probably should have bought this now that I've got the levels on my charts, but too bad. Yeah, that's that's FTT. Sol, yeah, a lot of this stuff is just mega mooned, to be completely honest with you, which is great. I think Sol is one of those where you either buy the shallow pullback or get the fuck out, because the actual breakout level is far away. It's kind of like a Sushi-esque example, right? And this is actually a really good example of being a buyer in the middle of nowhere being a crap idea. So in this case, we know we have our high time frame, mega important, blah, blah, blah level at like $4.50 or they're about the top of the range, found resistance, you know, breakout, untested. So that's the big boy, right? But then closer to price, we've got this cluster or consolidation here, which is our textbook impulse, short consolidate, impulse, expecting some sort of support here. So this is one of those scenarios, I think, where if, doesn't look likely at the moment, but if Sol, Solana pulls back, this is where you take your first punt, right, for continuation. And if that fails, you get the fuck out. You don't want to be a buyer anywhere in between, because there's this kind of gap between support and the next support. Smiley face good, anything which isn't in the smiley face area is bad. Okay, so at least how I contextualize these things. So I mean, look, no real resistance, new all-time highs, super bullish, etc. I think the best you can hope for pullback-wise into structure is at around 6.6, 6.8, whatever dollars. Expecting that to hold if it gets there, although I don't really form those opinions in advance. If it does, great, continuation. If not, this is your next level, and if it doesn't pull back, tough tits. You have to wait for something else to form before maybe taking the same trade at a different price point. JR says, all alts dropped on the Bitcoin pump. Is it smart to dump the ones that don't bounce right back for the ones that do? I mean, that's a slightly... It depends, is the answer, in terms of is it right to dump them. What I do think is useful from your question is pay attention to which altcoins perform really well during Bitcoin dumps. So look at like your collection of alt. That's why I've got it here, right? You can see for all these altcoins, the DeFi ones, I've got the USD pair and the BTC pair. So in these sorts of conditions... Yeah, I'm answering your question now. Awesome, that. So in these sorts of conditions, like whether to dump or not, I'm not gonna. I mean, I just simply don't know what your trade looks like, so I can't answer that. But in terms of making a decision, what you want to do is look at the BTC pairs which held up better than most, right? Like ZRX BTC, for example, is only down like 1%, and then SNX only down 1% compared to some of these others which got hit a lot harder. And that's how you determine relative strength in which altcoins are likely to outperform or bounce the hardest out of a group, right? So you make a mental note or a physical note, whatever, of which alts are the ones which lost the least against Bitcoin. And then if Bitcoin consolidates, pulls back, whatever, and presents a better opportunity for altcoins, those same ones which showed relative strength during the dump are going to show more strength during the pump, so to speak. Does that make sense to anyone? That's at least my approach when it comes to making those choices. Dumps are great to determine demand, says Noah. Yes, I agree. I know you were talking about BTC pairs. That applies to your BTC pairs question as well. Do I think Bitcoin will reach 1 million this cycle? I find that incredibly unlikely, but I would welcome it, of course. Someone asked about Bitcoin. Again, hasn't changed a ton for me. And again, I'm biased in a sense almost, because I've sort of traded it twice during the course of today. So I think the clearer... I mean, it's not a bad close, because it technically, you know, arguably found the close above the lower extremity of support, so to speak. But generally speaking, I think the clearer case for continuation will emerge above this retest level, right? Above this retest level, I'd probably like to get back in and contribute, and then basically take out the highs and put in a trending leg higher. But while it's testing the underside here, I'm not going to be as optimistic. And again, my basic idea was that trade. I bought the upper boundary of support more or less here, anticipating continuation higher through these highs and then whatever. Instead, my entry looked like... basically, my long entry started to look like a short entry, and that's usually when I get the fuck out. And I puked that during the stream here. So I'm flat now, at least on futures. I've still got my full spot exposure in Bitcoin right now, actually. So we'll see what's up. Let me see if there's any final bits and pieces. You think this could be any questions, let me know. Rob says, you think this could be another Elon pump and dump before we simply trend higher again? I don't think so, because I think the bio, this candle here, was when he changed his bio to say Bitcoin. That was practically, with the available information available, fucking hell, that was literally a nothing burger, because he changed his bio, and I think a lot of the market got bid up anticipating some sort of news, like the kind of news we got today, but nothing happened, right? So you had this crazy move up in the early hours, then the Americans stepped in and realized that really nothing was going on, and it was kind of similar conditions with funding, etc., being unfavorable to keep financing those long positions, so we kind of retraced. I think in this case it's probably different for two reasons. One is the all-time high break, and two is that the actual news is real, right? So could it retrace because futures don't look easy for long holders? Yes, but it really shouldn't be retracing all too much if it does, because again, the less time that the market spends at all-time high, the better for the most part. But to answer your direct question, do I think it could be another Elon pump and dump? I find that far less likely than this one, because in this case, the context is different, not least because the news is real, so to speak. I'm not entirely sold, no pun intended, on the sell the news. I'd be happy to sell the news if the technicals line up, and we have some sort of failed breakout, ideally through the weekly level here. Right, back below that, I think, you know, at least to the range low, if not lower, sure, I'll entertain that. But I don't think, at the moment, there's enough evidence to suggest a sell the news type of argument, for me personally. Okay, I think that's all I've got in terms of arguably useful content. I'm going to go watch this chart, pretty much, and see how this consolidation resolves more broadly. If we can get to 3 more likes, that'd be sick. 400 would probably be the highest we've gotten in a while. That'd be fantastic. As for other things, newsletter, which is free and it's good, comes out tomorrow at 8 p.m. UTC. TechnicalRoundup.com for that one. Of course, a thank you to the show's sponsor, which is Bybit. Make sure to visit them in the links available via the description below. That's all from me for this week. You'll see me on Friday with a very cool guest. that I'm sure you'll enjoy. And yeah, thanks for hanging out. Hope you learned something. Leave any comments for me to revisit, etc., etc. And let's see in the space of the next few hours whether I need to buy the top for a second time. Take care. Hope you had a good weekend and a good start to the week, etc., etc. See you next time.